Hello and welcome to Calling Monster Finance. It's September 22nd, 2025. Today, the U.S. markets painted a complex picture, closing at new record highs while simultaneously flashing signs of significant investor anxiety. On the surface, major indices were lifted by a powerful surge in technology stocks, fueled by a landmark investment in the artificial intelligence sector. However, beneath this bullish exterior, a flight to the safety of gold and sharp divisions among Federal Reserve officials revealed deep-seated concerns about policy uncertainty. Today, we'll break down this market divergence, analyzing the powerful AI narrative, the impact of new executive branch policies, and the conflicting signals coming from the nation's central bank.
The closing bell marked another record-setting session for U.S. equities. The S&P 500 climbed 0.44% to finish at 6,693.75. The Dow Jones Industrial Average added 0.14%, while the tech-centric Nasdaq Composite led the gains, rising 0.70% to close at 22,788.98. This performance continues a period of strong market momentum, seemingly defying the historical trend of weakness in September. But today's story is one of contradiction. While stocks rallied, the classic safe haven asset, gold, also surged, hitting a new record high of its own, with a gain of over 2%. This unusual divergence, where both risk assets and safe havens perform strongly, points to a market grappling with a complex set of forces. Investors are navigating a landscape defined by three key themes. First, a supercycle of investment in artificial intelligence continues to be the primary engine of growth. Second, sudden and impactful policy decisions from the executive branch are creating clear winners and losers across different sectors. And third, a starkly divided Federal Reserve is broadcasting conflicting messages about the future path of interest rates, creating significant uncertainty. What this tells us is that while the market is enthusiastically buying into a powerful, technology-driven growth story, it is also actively hedging against the potential for policy volatility, whether from the central bank or the White House. Let's take a deeper look at the primary forces that shaped today's trading. The day's biggest catalyst was undoubtedly in the technology sector. Nvidia announced a monumental plan to invest up to $100 billion in OpenAI. This commitment is aimed at building a new generation of massive AI data centers, signaling a dramatic acceleration in the AI investment cycle. The market reaction was immediate and powerful. Nvidia's stock surged 3.93%, and its gains were the single strongest force lifting both the S&P 500 and the Nasdaq. This news propelled the entire S&P 500 information technology sector, which finished as the day's top performer with a gain of 1.74%. At the same time, direct policy actions from the executive branch created significant crosscurrents. A new proclamation imposing a $100,000 fee on employers for each new H-1B visa created an immediate headwind for companies reliant on skilled foreign labor. This weighed on major tech firms, with Microsoft falling 0.67% and Amazon dropping 1.66%. In contrast, reports that a deal for the sale of TikTok to a U.S. consortium was nearing completion directly benefited Oracle, which is slated to secure the platform's U.S. algorithm.
Oracle's stock surged 6.31% on the news. This brings us to the Federal Reserve, where a deep policy divide has become public. Following last week's 25 basis point rate cut, officials are now openly disagreeing on the path forward. On one side, officials like Atlanta Fed President Raphael Bostic remain focused on inflation risks. On the other, newly appointed Governor Stephen Moran is arguing for an additional 1.25 percentage points of cuts this year. This internal conflict is a key driver behind the flight to safety we saw today, with the uncertainty helping to push gold up 2.03%, while the U.S. dollar index fell 0.31%. The influence of key public figures was also a significant factor in today's market dynamics. President Trump's administration was the source of the H-1B visa policy, which, as mentioned, directly contributed to the negative performance of stocks like Microsoft and Amazon. Separately, a recent meeting between the president and Tesla CEO Elon Musk, described by the president as nice, has sparked speculation about a political reconciliation. This follows a public falling out earlier in the year and suggests a potential realignment that could more closely link Tesla's future to the political landscape. For his part, Elon Musk continued to shape Tesla's narrative. He made a strategic declaration that the company's humanoid robot, Optimus, will eventually represent 80% of Tesla's value. This move reframes the company from an electric vehicle maker to a broader robotics and AI firm. This new growth story, combined with a recent $1 billion stock purchase by Musk and the perceived thaw in his relationship with the administration, helped fuel investor optimism. Tesla's stock reflected this sentiment, closing the day up 1.91%. Looking at the market's internal structure reveals the day's divergent performance in sharp detail. The S&P 500's modest gain of 0.44% masked significant splits among its 11 sectors. The clear leader was information technology, which surged 1.74%. This outperformance was almost entirely driven by the AI investment narrative, headlined by Nvidia's 3.93% rally and strong gains in other tech names like Apple, which rose 4.31%. On the other end of the spectrum, defensive and interest rate-sensitive sectors lagged. Consumer staples and communication services were the worst performers, both falling 0.89%. The financial sector also ended in negative territory, down 0.14%. This performance gap highlights the market's narrow focus. The rally was not broad-based, rather it was concentrated in the specific growth story of artificial intelligence. Meanwhile, other areas of the market showed weakness, reflecting the broader concerns over policy uncertainty and the economic outlook that drove investors toward the safety of gold. Now let's recap the closing numbers for today, September 22nd. For the major U.S. indices, the Dow Jones Industrial Average closed at 46,381.54, up 0.14%. The S&P 500 index finished at 6,693.75, a gain of 0.44%. The Nasdaq Composite ended the day at 22,788.98, rising 0.70%. And the Russell 2000 index closed at 2,463.34, up 0.59%. Turning to key commodities, currencies, and yields. The CBOE Volatility Index, or VIX, rose 4.21% to 16.10. The U.S. dollar index fell 0.31% to 97.34. The U.S. dollar to Japanese yen exchange rate stood at 147.68. The yield on the 10-year U.S. Treasury note was stable at 4.14%. Crude oil futures settled at $62.34 a barrel. Brent crude futures closed at $66 a barrel. Gold futures surged 2.03% to a record $3,781.20 an ounce. And the price of Bitcoin fell 2.26% to $112,759.77.
Finally, let's look at the top 5 stocks by trading volume today. Number 1 was Nvidia, which gained 3.93%. Number 2 was the S&P 500 ETF from SPDR, which rose 0.47%. Number 3 was Tesla, closing up 1.91%. Number 4 was the Invesco QQQ Trust, which added 0.59%. And number 5 was Apple, which had a strong session, gaining 4.31%. In summary, today's market presented a tale of two narratives. On one hand, a powerful and accelerating investment cycle in artificial intelligence drove technology stocks and major indices to new heights. On the other, deep divisions at the Federal Reserve and impactful executive policy actions fueled significant investor anxiety, leading to a flight to safety in traditional havens like gold. This fundamental contradiction between tech-driven optimism and institutional uncertainty is the key dynamic defining the market right now. Looking ahead, investors will be closely watching the upcoming earnings report from memory chip maker Micron Technology tomorrow, for further confirmation of the strength and breadth of this AI-driven demand cycle.
If you found this analysis helpful, please hit the like button, subscribe to our channel, and share this video with your friends. The content provided on this channel is for informational and educational purposes only and does not constitute financial, investment, or legal advice. All investment decisions should be made with independent due diligence and in consultation with a qualified professional. While we strive to ensure the accuracy of the information presented, we cannot guarantee its completeness or correctness. Any risks or losses resulting from the information on this channel are solely the responsibility of the individual. The views and opinions expressed in this video are those of the speakers and do not necessarily reflect the official policy or position of this channel. This content is not an offer or solicitation to buy or sell any financial instruments.